Have you been losing money because you are trading 1 minute chart? In this video, I will show you a simple 15-minute gold trading strategy that helps you avoid market noise and find high probability setups. Actually, I'm teaching what most of your mentors doesn't want to tell you. Because this gold market, I've tried it for several times, and you can see this is a real account when you look at it. I've grown this account from a small account, was $20, but I've grown it trading gold. So just know I've traded this account, and you can see the stories there. There are losses, there are these profits. We made $11. There are some losses. You can see losses that we make $10 and so on. So, and we are still going, but we are making it real. Okay. So now this strategy, it is called liquidity sweep. Okay. So now most of your mentors, they tell you this, but they don't show you how. So this is what I'm going to talk about today. Okay. So now this one is based in the trending market. When you identify that, yes, this is a trending market, can you see this? This is a trending market. I think you can guess it. It is going down, right? So always we got like what we call entries in the trading market. So here, after identifying what we call the break of market structure, what we mean by break of market structure is market coming and breaking what we call a previous low or a previous high. For example, here, the market here, it came and broke this previous low. This was a previous low that you are seeing right here, guys. I'm not going to use a trading. I'll be using this MT5 for you to see the real market moves, guys, right? So this is a low. Now the market broke this low. You can see this break. Okay, the market broke a low. Now the magic comes here, guys. When the market breaks a low, now this is what I want you to know, guys. Or is what I've seen this for several times. I've seen it several times that God respects it. There's what we call the liquidity sweep, what we call the inducement. Always God will first make inducements before it moves, guys, right? And we have to first see that inducement before doing anything. So this is the inducement that I'm talking about, guys. God will first make what we call the fake sell. Can you see this? It first sold from here, right here. Okay, so it was faking traders that yes, I've moved. Not until to come back. Now this is what I want to show you. Not until to come back to our entry zone. Remember, when we see the break of market structure, we are going to see the lower high that made this break, and the lower high that made that break of market structure is right here. You can see this is the lower high. This one, it is the lower high that made the break of market structure. So we shall always be looking for that lower high. We shall wait for the market to come and sweep liquidity on those lower highs after taking out this inducement. Now this is the market. Can you see this retracement? This is the market. This retracement the market made up to this lower high right here. Now this one, it always happens during like in New York session. You should not be on hurry. Don't hurry things. Okay. So just wait, just be patient and wait for this confirmation. I'm telling you, this confirmation I'm showing you now. Or is the market will create this after taking out this low right here. It will close again inside. It will close inside. Okay. So when it breaks with the full body candles and it just keeps on moving, that is okay. But most of it, almost 85% of the trades, these trades, they will happen. That's why you are seeing this bearish engulfing candlestick right here. After taking out this low right here, this lower high, now it has created the bearish candle right here. So now traders, they were entering from here. Now this is a high probability trade, guys, right? That's why someone who entered from here at the close of this entry, this is an entry. This is a confirmation. Now that's when you will put here your TP right here, okay? Like here, it will be a lot of pips. Gold had moved, right? So this gold, it is going to show you these confirmations each and every time. Now you see this one, guys, okay? Now gold was in the bearish trend. Of course, it was breaking lows, right? We are in the bearish trend right here. Why? Because we have the break of market structure right here. And we said after identifying the break of market structure, now we look for the lower high now because we are in the bearish trend. The lower high that led to that break of market structure. And when we talk of the lower high, it will be right here, guys, okay? So now that means we shall look for confirmations inside that range, right? And the inducement, of course, I told you the market will first create inducement. This is the inducement right here. So now the market created inducement. So now our role is to wait for this market to come and take out this inducement right here, okay? And you can see that the market came and took out this inducement right here, right? It came and took out this inducement and it made a very good sell. And what did it use to move right here, guys? You can clearly see that this market actually, when it took out your inducement, guys, it used what we call a fair value gap zone, guys, right? So it faked like these buyers that yes, I've made a break, now I'm going to buy right here, okay? Because this was a fake buy right here, guys. Because when it broke this lower high right here, now the breakout traders, they were saying, okay, now the market has broken, we are going to long this market, not until to come back. And remember, the sellers, they were putting their take profit right here, guys, right? But after taking out all those early early buyers and early sellers right here. So you can see that you can see this fair value gap that we are talking about on our 15-minute time frame right here. So you can use all those strategies. You can use fair value gap or order block to trade this gold market. You know, it is predictable. I cannot say that it's unpredictable. It is predictable when you follow it correctly, guys. So this is yesterday's market, guys, right? This trade was really nice, guys, yesterday, and you can see that actually here the market is creating lows. The market was in a bearish trend. When you look at it closely right here, it is still selling, but it started from right here. Let's start from here, guys. It started from right here. It made the break of market structure right here, guys. Okay, after making the break of market structure right here, it created for you the inducements. These are the inducements that the market created. Okay, you can clearly see these inducements that the market, of course, there were higher chances for the market to come and take out those inducements. You can see this is the move. It took out these inducements, and this is the move right here that took out the inducements. Now we have this high that is resting here, this lower high. It was a high before making a lower high. Of course, the market had to first come and fake out these early buyers right here. That there are these breakout buyers, breakout traders, right? Not until the market to come back inside. This is the confirmation that we shall pay attention at. You can see this bearish candlestick. Okay, it created this bearish candlestick on our high right here. Okay, remember it faked out these buyers that were trading breakout. Okay, and it came back inside our range, and we have entered from here. And of course, the TP has to be on these lows right here. Okay, it has kept on doing that over and over. You can see it right here, guys. Okay, when you see it right here, the market actually broke. It broke right here, guys. Okay, this is it. So there were breaks of market structures right here, though they were small, but they were there. Okay, and when that market broke, guys, you can see this is the inducement. Always we have to look for the inducement. Okay, you can see the inducement right there. And when we talk of the inducement, when the market came and took out that inducement, I want you to show you this. Okay, you can see that when the market took out that inducement, it came back and closed inside our range. Most traders, those who trade breakout and retest, they were faked out because the market had broken this high, this lower high. Now traders, they were saying, okay, now we are going to long this market. Not until for it to come back inside our range. And they entered from this because this is a bearish candlestick confirmation. So after getting this bearish candlestick confirmation, now people, wholesalers, they entered right here at the closure of this candle, and the market, you can see how it sold, and it is still selling, guys. Okay, so all this is when you follow and when you really patient with God and wait for those moves to happen. If you don't wait for them, guys, don't try God. Just trade other pairs. They are less volatile pairs, which is not God. So trade those ones. But if you're patient and you can wait for the setup to form, now you can be able to trade gold perfectly. Me, I've traded it with my small account. I don't fake these accounts, guys. This is a small account I've been trading for some time, and we are still trading it. I set my daily target and my daily loss. You know, you have to trade these accounts as if you're trading a prop farm for you to compound them very well, guys. So if this video has helped you and you have got something today, consider subscribing to it. Give a like and share to friends so that they can also benefit. We meet.